Welcome to The Interest. I'm Sarah Wolak. Happy Monday, everyone. As the year is winding down, we're still trying to gauge what the new year will bring. And for that, we'll hear from our own Bill Bodnar in this week's Master of the Markets. And make sure to stick around for our own Vincent Valvo and Andrew Berman going glove to glove in this week's cage match. Meanwhile, the new year approaching means new beginnings, maybe a new job. But in a competitive job market, making yourself a compelling candidate may seem challenging. But the right approach and mindset can help you stand out to hiring managers. For originators, both experienced professionals and newcomers, it can be intimidating to distinguish themselves beyond their production numbers, especially in a tough job market where standing out is crucial. I had the opportunity to talk to a few top producers and industry coaches about how to stand out beyond those numbers.
The mistake that a lot of LOs are making as the market shifted, whether they're new, whether they've been doing this for a long time, they focus too much on, look at how many great reviews I got.
In a time where loan production is on the downside and job applications are survival of the fittest, LOs need to find ways to stand out beyond their production stats.
So the first thing, if they want to grow, is they have to shift their focus and start focusing on what's the value they're actually bringing to the borrower.
Michael Hammond is a coach for Next Level Advisors. He says that the best way to connect with a job recruiter is to not make the conversation about you. Instead, talk about the ways you helped and serviced others.
And when you share those stories, they're very relatable to other people.
And if you end up getting the job, Hammond also says that you want to stand out to your referral sources. Why should they send you business?
So if you're going to start reaching out to real estate agents and build that network, you have to provide something of value. When I say value, I don't mean monetary value. I mean informational value.
You can read more about how to stand out beyond the numbers at nmpmag.com. Reporting for The Interest, I'm Sarah Wolak.
Angel AI is revolutionizing the home financing process. Here to tell us about it is Pavan Agarwal, the CEO of Celigence, the company behind this new amazing app. Tell us how Angel AI is helping the home financing process.
We use empathetic AI technology, so Angel AI understands the emotions behind human inputs so that the application to approval to close of a mortgage is nearly free of human touch and free of human error, and is lightning fast compared to the manual standards of the real estate industry today.
What about the people who have found it hard to get a mortgage?
Angel AI has made the approval process for mortgages fair and transparent, such that we have cut the decline rates for minority communities by half relative to the national average. Just go to angelai.com or click the Ask Angel AI Now button and ask Angel AI your home finance questions, or simply ask her to send you one of these cool free t-shirts. Angel AI has transferred the home financing business and made it fairer and easier for everyone.
Hello, everybody. Thanks for tuning in to our Master of the Market segment. So last week capped off a 6-week run we haven't seen in over 40 years, right? Watching the 10-year note go from a little over 5% to just a little over 4% was just remarkable. But that now leads us into this week, and this week is filled with headline risk. It may very well define whether this historic rally we've seen in bonds can continue through the year. And so it starts with CPI. So we're going to get an inflation number. There are rumors that the headline month-over-month number may show outright deflation, which means prices actually going lower year over year. Right? So that can be incredible. And then, of course, the main event's on Wednesday with the Fed. And, obviously there's no chance of a rate hike, and we probably shouldn't expect the Fed to celebrate or do a victory lap that inflation's done. But it's really tough to try to sell a rate hike now because the markets are looking ahead and are already pricing in cuts as soon as next spring. And that would fall right in par with, history, where 8.6 months after the last rate hike comes the cut. That puts us squarely into April. So we shall see. But on top of all this, team, we have tons of auctions. And so we have all this push-pull news we got to watch, and we got to watch key levels carefully. We're highlighting 4% on the 10-year note here at Mortgage Market Guide as a number. We get beneath that, and then 4% becomes about as bad as rates can get. It would be something that we could celebrate going into the holiday season. I hope this finds you well. See you next week. Bye for now.
All right, Vince. So should hybrid brokers even really be called hybrid brokers? Should be called brokers. That's what I really.
Well, I guess that's the question. It's really all going to get around to what is a broker these days. What do you think? When you say a hybrid broker, explain what you're talking about there.
Okay, so hybrid broker is someone who, generally speaking, has a warehouse line, has many cases a non-delegated relationship with investors, so they can act as a mortgage banker in certain transactions, and they can act as a broker. So now, what would the licensing status be?
I think they'd have to be licensed as a mortgage banker, right?
Okay, so there we go, and I just won. There you go. So they're not
Just one.
they're
Okay.
not a mortgage broker.
I don't know that I'm disagreeing with you on this one here. I think that they certainly aren't necessarily a broker, and I really think that the real question becomes down these days is what is a broker? We keep hearing about the growth of the broker channel. I really think it's not a question of the growth of the broker channel, but maybe we need to. I think growth of wholesale, but I think we need to talk about at some point here the transformation of the broker channel from being pure brokerage to being a lot of different versions of hybrid brokerage.
I get what you're saying. So it's not necessarily like there is chocolate. There is also chocolate, dark chocolate. There is all sorts of
milk chocolate, white chocolate. There's variations on that. Because listen, we're talking about the ones who are correspondent. What about brokers who basically have put all of their business through one company?
Yeah.
Are they truly brokers anymore? They've got a broker license, but are they brokering for real, or are they basically distributed retail? Captive retail for someone else. They could do
licensed as a mortgage broker, so by definition they would be a mortgage broker.
But are they truly a broker? Just like the same thing. Just like you've got these folks who are licensed as mortgage brokers, who have their mini correspondent, maybe have obtained an additional license as a mortgage banker, but see themselves as a hybrid version of this. And they're going to still say that they are brokers. And what they're going to say to you when they're reporting their statistics and all, it's like, I've got a team working with me. I'm a mega broker. And they're proud to be brokers.
What you are. The licensing says what you are.
No, the licensing, your actions will help say what you are. The licensing is part of what says what you are. But what you do also says what you are.
I am now CEO of American Business Media.
Well, you don't get to actually do the things that the CEO does, so that doesn't work, even though you can say yourself.
Yeah, but
you're not licensed as that. That's
everyone,
not how that
I've just made myself the CEO of American Business Media.
That's great. The chairman will have words with you later on about your employment contract. Listen, I think that we're seeing a lot of changes in the brokerage channel as a whole here. Yeah. And we've said that. We do see a big increase in brokers and brokerage. Yeah. I think the next couple of years are going to be very interesting to take a look at how this whole channel is evolving with different flavors. Not quite as one size fits all as it used to.
I agree.
So
I agree on that.
I agree with you too. Yeah. So we're gonna have to be like we're actually gonna have to call a draw.
Okay. There we go.
All right. First draw.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.